Thanks, Melissa. Meantime, rates are on the rise again. Financials at record highs, and some Fed officials appear supportive of tapering. Joining us right now to talk Fed and financials is Bob Diamond, CEO of Atlas Merchant Capital. It's great to see you, Bob. I want to also talk about your own SPAC and Circle, which we just had the CEO of Circle on in the last hour, Bob. But let's talk about the Fed and what you think is about to happen, or not.
Excuse me. As we talked the last time I was on, I think the discussions are already going on in the Fed about the potential for tapering. We would expect to see some kind of an announcement in September for probably action around December, Andrew, in tapering. But just to put that into context, as of today, the Fed's purchasing about $120 billion in securities a month. $80 billion in U.S. Treasuries and $40 in mortgages, and we do expect that tapering to begin.
And what do you think the impact will be?
You know, I think we've talked about this as well. I see kind of that 1.5% to 3% as the range for the 10-year that's been there. It seems like forever, with a few exceptions. Today is one of those exceptions, but if you step back and look at the impact of the Delta variant in terms of an interruption of the recovery, if you will, if you look at the surge in spending, it's probably past its peak. If you look at the impact of fiscal spending, $5 trillion during the COVID, now much, much less is an effect of tightening. And then if you add into that a tapering, then I truly do expect a steeper curve and higher yields. And I would expect the 10-year over the next 6 months or so to be operating more in the higher end of that 1.5% to 3% range than just below it. So I do think there'll be a big impact on rates.
You've made a career running financial institutions and now investing in them. Does that mean you want to be in or out?
We love the financial space. The question is, do you want to be investing in the legacy national banks, or do you want to be investing in some of the specialists and technology companies? And you know, when the financial crisis hit in 2008, if you looked at the market cap of financial services in the U.S., it was dominated over 90% by kind of the large legacy national banks. Today, that's closer to 70%. And I think the impact of specialists and I think the impact of technology in kind of the core earnings of money transmission, treasury and transaction services, some of the standalone lending operations, many of the standalone broker dealers has had an impact. Yeah.
Let me ask you about Fintech. One of the comments that your peers, Jamie Dimon, has made repeatedly is that the big banks are regulated in a meaningful way and that the Fintech industry effectively is not. He believes that puts the legacy banks at a disadvantage. Do you believe longer term we're going to see increasing regulation around the Fintechs, and does that create a better environment for the legacy players longer term?
I think you're absolutely correct. And, you know, is the CEO of Circle, who was on just a little while ago, talked about, you know, they intend to apply to the OCC to become a commercial bank. I think Circle is a good example of being in the stablecoin space. They not only embrace, but they encourage, and they have been a pioneer of being the most regulated, the most conservative, and really look forward to more regulation in that space. So I think directionally you're correct, which is that there will be more regulation in the digital space and the crypto space and the technology space. And I actually think that will give an advantage to many of the fintech companies relative to the legacy banks.
Shepard Smith here. Thanks for watching CNBC on YouTube.